Good morning. It is Monday, February 26th, 2024. It is about 10:30 a.m. on the East Coast. This is Rob Sin at CEO Technician on X, at Goldfinger on CEO.ca, and at Goldfinger Capital on YouTube. I apologize for the sound quality of this video. I lost my external mic traveling, so I have reordered one. And so we'll just have to make do this week. This week's video is a little more concise. Of course, I say that, and then sometimes it's still an hour. But I think we're gonna move pretty fast here today. Um, the first order of business is this is BMO Metals and Mining Week. So usually we get a lot of news, releases on Tuesday and Wednesday. Also, PDAC is next week, so we'll also get the pre-PDAC news from junior mining companies. So we should be pretty busy for the next week in terms of news flow in the mining sector. Um, this morning was a little light, but I think a lot of companies are planning to announce news tomorrow and Wednesday. So we'll start with the macro. You can see that I put up these four charts on labor market rebalancing. So you see the hiring trends, downtrend, percent planning to increase employment, downtrend, and layoffs, transcript mentions in company conference calls is upticking. Okay, so the labor market is definitely rebalancing in the US and globally. And in the last Fed minute, so the January Fed meeting, there were increasingly strong indications that they were planning to taper the quantitative tightening. So that may happen in April, it may happen in June. We don't know exactly because they haven't committed to it yet, but there's talk of it. And it seems like it's likely to happen here in the first half of 2024. Also, the rate cut expectations have definitely been pushed out. It's looking like June is going to be the first rate cut. A lot of Fed speakers saying, I expect to cut rates later in the year. Some have said mid-year. So June is what it's looking like, but still a very fluid situation. Looking at the broader market, I mean, markets are pretty boring this morning, not much movement. You can see the S&P. I mean, we're consolidating right near all-time highs. The S&P is not representative, though, of the overall market. And if you look at the IWM, it's not confirming the new highs in the mega caps, which is the QQQ and the SPY. But this is definitely not a bearish chart either, right? So the stock market continues to be quite robust, and the NVIDIA earnings last Wednesday afternoon definitely helped to put a bid into stocks at the end of last week. But you got to look at the NVIDIA chart and you got to think, wow, this is really, really overstretched. And it definitely captured a lot of headlines at the end of last week, Thursday and Friday. Definitely not the time to be chasing something like an NVIDIA here at $800 a share. Caterpillar, this is one of my go-to charts. So just look at the overall health of the global economy and the stock market, and it's pretty strong. There's no warning signs here in the Caterpillar chart. Freeport-McMoRan, though, is gapping lower today and trading down about 3%. So copper is a little bit weak this morning. And let's say there's just a little bit of a warning sign here that Freeport has now carved out a pretty clear downtrend since the end of last year, making a series of lower highs and lower lows. Relative strength is starting to roll over. So Freeport, some technical warning signs are starting to emerge in this chart, and that's something that we should definitely keep an eye on. One of the large cap tech darlings that I actually really like is Palantir. Talked about this a couple weeks ago. when it was breaking out after its earnings report, and it's holding the breakout quite well. It's sort of a high and tight consolidation up here around 23.50 a share. This one looks very good on a technical basis, and the fundamentals look fantastic for this company. You know, security, AI, working with a lot of countries to increase their, security, and using artificial intelligence in that. It seems like this company is at the sweet spot of multiple trends that are growing rapidly. Let's put it that way. I mean, this is an increasingly contentious world that we live in, and so Palantir has a very strong role in this world. So I like this one. I'm long Palantir. Cameco, so uranium has seen a really stiff correction in February, but this is what the uranium sector does. We have to remember that they either love them or they hate them. And in February, they've hated them. Um, Pretty stiff drawdown across the sector. But I think we're getting to the point where we may be at the end of this correction. We're in the eighth or ninth inning, I think. And we want to see if Cameco can hold support at $40 a share. A lot of people are going to say, well, it needs to come down to the 200-day moving average. I'll just say that when something is so obvious as the 200-day moving average on this chart, usually doesn't play out that way. Um, I'm thinking that Cameco may be finding some support right around here, around $40 a share, and it may not need to go all the way down to um, 38. I think the 38 is just too obvious of a downside target, but we'll see. We'll see. I'm long Cameco for a little trade here. Um, Gold futures open interest down to 400,000 contracts. That is very, very low open interest, lowest in more than 5 years. You can just see here net speculative length continues to drop. The commercial short position continues to drop. Just speculators, market participants are increasingly uninterested in precious metals. And the fact that gold is trading in such a tight range, the realized volatility in gold is minuscule. You're talking about like 1 or 2% movements. So just market participants just aren't very interested in gold right now. But I will say, taking a look at the gold chart, that this is still a very constructive consolidation with its 14th consecutive weekly close above $2,000 an ounce, rising moving averages. This is an uptrend. And I would say that gold is an increasingly dull, maybe even boring market. And there's an old saying, never short a dull market. And so that's exactly what we have here with gold. Um, yeah, I mean, it's hard to guess when the train leaves the station, when we embark on the next leg of the uptrend. Um, but the fact is that gold is holding up very well, and it continues to consolidate above $2,000 an ounce. You can see we're down a little bit here this morning, testing this support, this short-term support level near 2035 in the April gold futures contract right now. Silver, last week I mentioned how I am increasingly constructive on silver, and that is still where I'm at here. Yeah, silver was down 2% last week, but no big deal. It's continuing to consolidate in this range, continuing to bore people just like gold is. Um, yeah, I like silver here, but that doesn't mean it has to go up tomorrow or go up this week. This is a weekly chart, so I'm talking more of a longer term view, but it's not really breakout. It's not really a resolution of this recent multi-month range until we get a weekly close above $26 an ounce in silver. So the gold miners, we got earnings from a few of them last week, including Newmont. Where is Newmont? Okay, I guess oh, there it is. Yeah, you can see the Newmont chart. This was the earnings report day, Thursday. Absolutely brutal. Absolutely brutal. It was down like 7% that day. And it bounced on Friday, but here we are down another 3% here this morning. Um, really, really just ugly chart, ugly stock, ugly company. But aside from just saying ugly, because that's what it is, let's actually talk a little bit about what happened. So the earnings were underwhelming. The guidance was also not overwhelming at all in terms of the production for 2024. And we have to remember that Newmont is the biggest gold mining company in the world, and they just acquired another large one in Newcrest. So they are an extremely large company now. And you could actually say bloated. You could actually say that they have to streamline their assets, their operation portfolio, and that's what they announced. So they're divesting 6 non-core assets, and I think that this also the market didn't love this because some of these assets have been held on the Newmont balance sheet at pretty good valuations. I mean, coffee, for example, was purchased by Goldcorp in 2015 for over $500 million. And now Newmont's going to be divesting it. And I'm pretty confident they're not going to get $500 million for it. I have no idea what they're going to get, but I'm going to be guessing it's less than $500 million just because Newmont chose not to advance it, chose not to permit it, and chose to actually divest it. Some of these other non-core operations are a bit older in their life of mine, and so yeah, it's going to be interesting to see what these assets go for and how long it takes Newmont to sort of get rid of them. But overall, this is a company that's trying to figure things out, and it's a messy process, I would say. They also talked about downsizing operations, cut jobs. So they're in the cost cutting side of the business, really sort of downsizing, focusing on just its core assets, its tier one jurisdictions. And so that was another interesting part of it. So almost entirely walking away from Canada, but not quite. They're committing to the Golden Triangle. So Red Chris and Brucejack, which were both, Newcrest assets in the Golden Triangle of Western Canada. So Newmont's basically saying that they think the Golden Triangle has the potential to be a tier one jurisdiction for them, although it is not that today. So that's interesting because the fact they're walking away from the Yukon, the fact that they're walking away from other areas of Canada, but they're committed to the Golden Triangle. That is very interesting. I think that's obviously positive for companies operating in the Golden Triangle. They also talked about a stock buyback. So basically, their hopes are to generate free cash flow that they could use for a $1 billion share repurchase program. But they didn't commit to a time frame. They just said 24 months. I mean, that's a long time away for Newmont to be spending $1 billion buying back its stock. Yeah. So Newmont increasingly looks like it does not deserve a premium valuation, the premium valuation that it has enjoyed for a long time, and it needs to figure out this Newcrest acquisition. It's just interesting that they were so positive on this acquisition when they made it, and so far it's not really bearing much fruit. Now, obviously, we got to give it time, but so far the market is not terribly pleased with Newmont's performance. They also cut their dividend from 160 a share to $1 a share annually. And yeah, the lower production outlook was definitely the killer for 2024. So growing pains continue in the mining sector. So let's talk about some other gold miners. So Wesdome. So this company is focused in Ontario, and they have performed extremely well in 2024. So seems like Wesdome is doing some things right, and the market is increasingly optimistic that they will be able to increase production at a lower cost. So this is probably the best chart among mid-tier gold producers. IAMGOLD IAG. This is no stranger to people who watch these videos, but the relative performance in IAG in recent weeks is very notable. On the one hand, we have Newmont completely just in a downward spiral, and IAG is actually forming a bit of an uptrend. Okay, it's not a breakout by any stretch, but it is a higher trend, and we're getting closer and closer to what could be an eventual breakout in this chart. Okay, the level I have is 270 on a weekly closing basis, and obviously if we got above 280, that would be even better. But this is a bullish chart when you consider just how poor the gold mining sector has traded the first 2 months of 2024, and IAMGOLD is actually higher over that time frame. So there's a lot of fundamental reasons why that is. Most notably, the number one reason is the ramp up of Cote Lake and the initial production expected next month, so in March. And I expect that IAG will announce that to the market once they have confirmed that initial production is underway there at Cote Lake. And the update they gave the market a couple weeks ago was very positive, saying that they expect to exit 2024 at 90% of nameplate throughput, okay, which is right on schedule. It's fantastic. Okay, so I continue to be long IAMGOLD, IAG. Medical psychedelics. Haven't talked a lot about medical psychedelics in recent videos. Sector's been kind of just going sideways, but now ATAI has definitely turned into an outperformer in 2024. It's up again today, almost 5%. And ATAI is probably now my favorite stock in the medical psychedelic space, and it's definitely clearly in an uptrend. This is the one that had the CEO buying shares in the market at the end of last year. They've got a very nice MDMA franchise, very nice pipeline of drug candidates at ATAI, and a boatload of cash. This is a company that has I think almost 200 million in cash. So it's in a position of strength. Okay, so I really like ATAI. CYBN has not been great, to say the least. We caught a little bounce there for a couple of weeks, but it's back rolling over lower again here this morning. I expect that we will get an update on CYB003, so sort of that 3 month update from that phase 2 trial, and also we should be expecting an end of phase 2 meeting with the FDA shortly to give the green light for CYB003 to move to phase 3. Um, so definitely looking forward to hearing a positive update from CYBN. But yeah, the share price has not been trading well, and the market is definitely concerned about their cash burn rate. So it'd be good to see the company, address that as well in a future update. Okay. Um, so turning to junior mining, again, I told you this was going to be laser. The only real company that I want to talk about in this particular video is Aston Bay. I will give you a preview. So BMO is happening right now in South Florida. I plan to stop by there in the next couple of days. Then we move back to Canada, Toronto for MIF and PDAC. I will not be in Toronto. I will be speaking at MIF Friday morning virtually. So I really want to invite you to tune in for that presentation Friday morning at MIF, because I know you guys are going to be interested in the topic of that presentation and some of the companies that I discuss in that presentation. I'm just going to leave it at that. Think about some of the companies that I did not talk about in this video. I might talk about it in that presentation at MIF. And then we'll look at PDAC. Definitely get a lot of news from a lot of companies. I think one of the things it's been a really bad year for the junior mining sector. First 2 months, it really couldn't have been much worse so far. I hold out some hope that we're not going to get another PDAC curse this year, but never know. I think a lot of market participants are fearful of financings being announced in March. So I think once we get past that financing fear, as we get further into March, we are set up for a really nice rebound in the sector, especially if the Fed does finally wave the white flag and says, okay, we're going to taper quantitative tightening and we're going to cut in May or June. But yeah, I'm interested to hear what the mood is like at PDAC. Maybe a lot of people spending time at the bar, drinking away their miseries. But anyway, tune in to my MIF presentation Friday morning. I think you'll get some value out of that, hopefully. So Aston Bay. So this is what I haven't talked about much in recent weeks, but this was on my tax loss buy list in December, right? I put that out. Aston Bay was at 6 cents. That was over in here. And the stock more than doubled in about 5 to 6 weeks later. We're up again this morning, up to about 12 cents a share on the TSX-V. And the proximate cause of today's strength is this announcement from American West Metals. Large exploration program set to commence at the Storm Project, Canada. None of it near the Northwest Passage, far northern Arctic Canada. But basically, they announced 22,000 meters of RC and diamond drilling this year at Storm, and they're mobilizing next month. So they're starting the season earlier than they started it last year, and they're basically doubling the size of the program. So this is probably going to be US dollars. This is probably going to be 10 million or more. It might be even as high as 15 million. The company recently raised 10 million Canadian, I believe, or maybe this is Australian, but I would expect that they're going to raise even more, because this is a substantial program, and the cost of this drilling in the far north is pretty, it's pretty high. But this is great news for Aston Bay, because again, they're fully carried during this phase in the project, right? So this is still in the exploration stage of the project, and Aston Bay is fully carried for their 20% at Storm. So this is great news for Aston Bay. It gives American West a real shot at making a discovery, something that would move the needle for the Storm project. Okay, and they outlined the maiden resource, 17.5 million tons, 1.2% average copper grade. And then they talk about the higher grade copper discoveries at Thunder, Lightning Ridge, the Gap, etc. And EM survey. So this is they're going into this guns fully loaded and giving it their best shot. I think that they realize this is not something that they want to go cautiously into, that they're at the stage where they have enough data. They should be really aggressive because time is money, and strike while the iron is hot. Every time that they shut down a summer program, it means they're waiting another year, right? So this is a very aggressive piece of news from American West, and they are basically saying we are going to give this everything we've got in 2024, and we are confident that uh, shareholders will be rewarded for being aggressive here. Okay. And just it's worth reviewing the whole thing, including the graphics. This is a nice plan view showing some of these high priority targets like Lightning Ridge, Thunder, Cyclone North. That's one we haven't heard a lot about, but they're going to drill it. Yeah, so very exciting. I mean, I'm very positive on Aston Bay. I'm not going to give you a share price target. I think that it's at the point where it can continue to gradually move higher over the coming weeks as as we get further into the season, as we get closer to the season. Really. Um, and you got to think that last year it traded above 20 cents. Um, I don't know. It could get back there, but yeah, we will see. I like the consolidation above the moving averages, holding support at 10 cents. I mentioned a few weeks ago that I thought 10 cents was a very important support level. Well, it looks like it held. Okay, so I'm long Aston Bay. Definitely like this one. Okay, that's it. That's it. So busy next week of news flow in the junior mining sector. Definitely, PDAC is going to bring a lot of news out from companies, and my MIF presentation Friday morning should be a good one. Oh, and I'll just say one more thing. Tomorrow at 2 p.m. Eastern, I'll be hosting a space on X, formerly Twitter, with Eric Coffin. We're going to talk about some of the companies presenting at MIF and just whatever else comes up in the conversation. I think that'll be a good one worth tuning into and maybe asking myself or Eric a question. So again, thanks a lot for your time in this week's video, and I look forward to a further update once we get this deluge of news from companies next week. Have a powerful trading week.